Good afternoon, friends. Extremely happy to welcome you to this webinar. As we are all aware, adherence to legal and statutory regulatory requirements is paramount to any organization. The annual Secretarial Compliance Report serves as a vital tool for assessing and ensuring the compliance of a company with various statutory provisions and guidelines. It provides a comprehensive overview of the company's compliance framework, policies, procedures, and activities throughout the year. The Securities Exchange Board of India, by its circular dated February 8, 2019, mandated the requirements of providing annual secretarial compliance report by a practicing company secretary to the listed entity with respect to compliance of all applicable SEBI regulations and circulars issued thereunder, and also prescribed the format for annual secretarial compliance report in that circular. The listed entity is required to submit this particular report to the stock exchange within 60 days from the end of financial year. Further, SEBI, via its notification dated May 5th, 2021, inserted Regulation 24A subclass 2 in LODR regulations, mandating the same as prescribed in the circular. Additionally, SEBI, via its circular dated October 18, 2019, prescribed certain additional provisions, particularly with regard to statutory auditors, their resignation and all. Then both the stock exchanges, that is BSE and NSE, by its recent circular dated March 16, 2023, and April 10, 2023, have prescribed few additional affirmations by PCS which needs to be provided while submitting annual secretarial compliance report. The above mentioned circular will be effective from the financial year ended March 31 to 2023 onwards. So the members felt a need to have a detailed discussion on this matter, particularly the compliance format, and that's why we have organized this webinar today. We are extremely happy to have with us two very distinguished personalities, Ms. Yogita Jadhav and Mr. Ranjit Pandey. I'm extremely happy to welcome both of them, and happy to introduce to you Ms. Yogita. She holds a bachelor's degree in commerce from Mumbai University, where she pursued her academic aspirations and obtained a master's in management with a specialization in finance. Since joining SEBI in 2003, she has consistently demonstrated her expertise and commitment to financial industry. She is currently serving as a general manager. Over the years, Ms. Yogita Jadhav has gained invaluable experience across various departments within the SEBI, honing her skills and deepening her understanding in regulatory landscape. Her journey within SEBI has encompassed pivotal roles in the corporation finance department, human resource department, derivatives, new product department, market regulation department, risk management and new products, as well as investment management department. We are privileged to have Ms. Yogita Jadhav with us today. Welcome, madam. We welcome you to the webinar.
Thank you so much. Am I audible?
Yeah, audible, yes.
Okay. I think there are some slight technical glitches in between, so you'll have to pardon me for that. I have also logged on from my phone. In case you're not able to hear me, please let us know. Let me know.
Okay.
Okay. Sorry for this slight, issue. First and foremost, a very good afternoon to all of you. I would really like to thank the ICSI for giving me this opportunity to address this webinar on annual Secretarial Compliance Report, which is actually a topic of great interest nowadays. Before going to the topic for discussion for today, I would like to congratulate the ICSI for taking initiatives of conducting webinars on diverse topics for benefits of all stakeholders. It is definitely a good tutorial kind of a thing wherein
I guess some technical difficulties there, Mohanji. Mohan Kumar ji?
Yeah. Yogita,
Yeah.
madam, we are not able to hear you.
I think we have lost the connection. Let's continue.
Friends, we are waiting to get connected to Yogita now. Meanwhile, I'll introduce the next speaker, Mr. Ranjit Pandey. Mr. Ranjit requires no introduction, but still, it's a courtesy to introduce him. He's a fellow member of the Institute of Company Secretaries of India, and he's a law graduate from Faculty of Law, University of Delhi. He's a practicing company secretary for over 20 years in the field of corporate and commercial laws. He's also a registered insolvency professional. He's a prominent advisor in the areas of corporate governance, compliance management, due diligence, corporate restructuring, and insolvency and bankruptcy. Currently, he is the chairman of Governance and Compliance Standard Board in ICSI and in ICSI Institute of Social Auditors. He is a chairman of Advisory Committee of Professional Members of ICSI IIP and also member of Disciplinary Committee of ICSI IIP. Mr. Ranjit Pandey has served as an elective representative of ICSI, which is a premier national body set up under an Act of Parliament, and has been the chairman of NARC during the period 2011. And he was also president of ICSI in the year 2019, while holding the position of
Mohanji, I think that is enough. Yogita ma'am has already joined, so now she can continue.
Yeah, I'll just continue. I'll not take a long time. Continuing, okay, where was I? For the last 3 decades, right? For the last 3 decades, company secretaries have been among the most valued professionals in terms of importance and impact. I mean, we should acknowledge that. They have also emerged as one of the important pillars of corporate governance, especially between the companies and the regulator. The functioning of a company secretary can enhance the governance at a company and bring in a positive impact for the company. However, the converse is also equally true, and that is the precise reason we regulators see you professionals as a vital cog in the wheel of corporate governance. With this opening remarks, I would like to get on the topic for today's webinar, which is Annual Secretarial Compliance Report. I must say that this topic is so broad that one can go on talking for hours. There are a plethora of laws, rules, procedures, and regulations applicable to every form of business, and the corporate sector in India has to abide by these various acts and regulations made thereunder. In addition, as Sir just pointed out, companies which get listed on a recognized stock exchange have to comply with the regulations framed by SEBI. As we all know, the SEBI is the regulator for the securities market in India. It has 3 important functions, namely the protection of interest of investors, regulation, and development of securities market. The securities market is a disclosure-based regime where listed companies can raise funds by making appropriate disclosures. These disclosures form the bedrock of the investment decisions for investors in the securities market. And SEBI, as part of its efforts to keep pace with the ever-changing market dynamics, keeps making changes to the disclosures, alters them, and other obligations applicable to listed entities from time to time, and following a consultative approach, of course. In this context, company secretaries are the most appropriate persons to ensure the compliances. That is the reason SEBI, in line with the international best practices, have made it mandatory for a listed entity to appoint a company secretary as a compliance officer. We as regulators have expressed faith in the profession of a company secretary in furtherance of better control and development of the good governance in the corporate sector in India. Corporate governance being a dynamic concept, SEBI has been reviewing it on and off, and in June 9, 2017, we constituted a committee under the chairmanship of Shri Aday Kotak to review the existing CG requirements. And based on these recommendations, SEBI notified the SEBI LODR Regulations 2018, which enhanced the corporate governance norms to be complied with by a listed entity. In this, Regulation 24A was inserted and made effective for the financial year ended 31st March 2019 in the LODR regulations, which mandated the requirements of annexing a secretarial audit report in the format specified for listed entity and all its material unlisted subsidiaries. Well, the annual secretarial audit is considered to cover a broad check on compliance with all laws specifically applicable to the entity. The listed entities are additionally required on an annual basis to have a check by the company secretary in practice on compliance of all applicable SEBI regulations, circulars, guidelines issued thereunder. Consequent to which the secretary in practice shall submit a report to the listed entity in the manner specified in the circular. Further to this, the requirement to submit a secretarial compliance report was also codified in the regulations in 2021, that every listed entity shall submit a secretarial compliance report in such form as specified to the stock exchanges within 60 days from the end of each financial year. As the securities market is a disclosure-based regime, now the purpose of annual secretarial compliance report is for an independent verification of records, books, papers, and documents by a company secretary in practice to check the compliance status of the company with the provisions of all applicable laws, regulations, circulars issued thereunder. Further, we have also suggested for issuance of a guidance note. I mean, SEBI has suggested for issuance of a guidance note by ICSI for helping the company secretary in practice to conduct this exercise in letter and spirit also. Going ahead, practicing company secretary also needs to check the reports and examine thoroughly compliances of various SEBI regulations, which inter alia also include our SEBI LODR regulations 2015, SEBI ICDR regulations 2018, SEBI SCST regulations, takeover regulations 2011, SEBI buyback regulations 2018, SEBI SBEB, SEBI PIT regulations, and so on and so forth. Now, if we go on the criticality of the PCS report, I would like to say that the report of PCA is extremely critical, not just for a company, but also for the investors and the regulators also. Because we as regulator rely on the report of PCS to get the comfort of a company's compliance with securities laws. In short, I can draw a parallel between your report and the audit report issued by a chartered accountant. So that is why it is so, we give a lot of weightage to this PCS also report. So the PCS needs to mention and report the adverse remarks or any observations while issuing the report to a listed entity. It must contain the details of any action taken by SEBI or stock exchanges in his report in bold type or in italics. If the scope of work required to be performed is restricted on account of restrictions imposed by the company or on account of circumstantial limitations, like certain books or papers being in the custody of another person which is not available or a government authority, the report should indicate such limitations and restrictions clearly. That is expected. Also, there are many instances where the company secretary may rely upon due diligence certificates of other intermediaries, say your merchant bankers, at the time of public issues, takeovers. Now, here also it is imperative for the company secretary in practice undertakes necessary diligence while checking the compliances, which benefits all stakeholders. So it's not just a maker-checker approach ki usne de diya and I'm just relying on his due diligence certificate. It is imperative, we feel, that the company secretary also has to take the necessary due diligence practices, which will benefit all the stakeholders, the company itself, the other stakeholders, regulators, the lenders, employees, and ultimately public at large. Virtue of this annual secretarial compliance report, it postulates verification on a test basis of records, books, papers, and documents to check the compliance with the various laws, to ensure the legal and procedural requirements and processes. Last but not the least, globally, regulators are also increasing focus on the governance at companies, the G of ESG. And therefore, in this context, the role of PCS becomes extremely critical Therefore, I urge you to keep this in mind and carry out the due diligence of companies. With that note, I would like to end my short speech. Thank you and best wishes for the webinar. Thank you so much.
Thank you, madam. Thank you for sharing your valuable thoughts, and we really thank you for accepting our invitation and joining in a very short notice. Friends, we've already read out the profile of Mr. Ranjit Pandey. Now I would request Mr. Ranjit to take over. Mr. Ranjit.
Yes, thank you so much, Mohanji. I guess opening remarks in regard to the whole circular has already been given by Yogita ji. And what is the expectation from the company secretaries while doing this audit and issuing the report of annual secretarial compliance report. So let me just give some overview, and thereafter we should go on the interactive part. So good afternoon, all the members joining this webinar virtually, and Subh Sandhya Pranam from my side. Thank you, President and ICSI Council, for giving me opportunity to come and speak here in this very important topic, Annual Secretarial Compliance Report. Because this is one, are you able to hear me?
Yeah, very clear. Yeah, go ahead.
So this is one thing which is applicable to the listed companies, and all the listed entities are required to issue this particular certificate. And SEBI has very recently has modified this particular certificate, and some additional information has already been given. And if you go through the additional information, it is very critical in nature. It is not only the traditional and compliance report or secretarial audit report which is given in MR3. MR3 has a specified format, and it has the scope of giving the opinions and judgments and all other things which our typical audit report gives. But here in the annual secretarial compliance report, you can see that scope for giving the opinions or scope for being subjective is not there, and you have to be very specific while addressing the compliances or saying that there is a compliance or non-compliance. So materiality concept might not be coming here, or you have to be very specific that yes, compliance has been done, or there is a non-compliance, and you have to comment on that, give remarks also on that. So I'll go in detail one by one, because if you talk about the key components of this particular annual secretarial compliance report, so I can highlight 8-9 points, and thereafter we can go on the question answer session. First is review of the compliances and good practices. It is there in the secretarial audit report MR3 also, that review of the compliances and good corporate practices and good conduct, which is there in the first paragraph and second paragraph of MR3. So that is required to be done here also, that you need to review the compliances and good corporate practices, and also you are required to comment on the corporate conduct of the company. Secondly, verification of the statutory records and register. This is also part and parcel of this annual secretarial compliance report. Opening paragraph, you need to say that I have verified the records and books of the company. Third point is reporting of status of compliances. So if we talk about the status of the compliances, it is very specific that you need to say yes or no. And if it is there is no or non-compliance is there, you will have to clearly say that why there is non-compliance, and what is your remarks or what is your opinion on that particular non-compliances. So that is also required to be given. Fourth is examination of the documents required, filing and submission, website disclosure, SEBI Act, SCRA, SEBI regulations, and all specified regulation illustrative list has been given in the fourth point. As far as illustrative list is concerned, if you can see in the bottom of the illustrative list, it is clearly mentioned that the aforesaid list is of the regulation is only illustrative. So company secretaries, practicing company secretary, be careful that this is not that you are just required to comment on A, B, C, D, E, F. F is saying other regulation as may be applicable, and bottom of it is there is a note. It says that aforesaid list of the regulation is only illustrative, and the list of such regulation as may be relevant, the applicable to the listed company for review period shall be added. So if you feel that 12 regulation or 13 regulations are applicable in this particular annual secretarial compliance report or particular company, then that particular thing is also required to be added. Then going on to the fifth part, they are talking about the list of the compliances done by the company. Circular is saying. Sixth part is list of the non-compliances along with remarks and observation of the secretarial auditor and observation of the management also. Then comes the action of the previous year observation. This is very, very unique feature which has been done in the annual secretarial compliance report. It is saying that not only this year compliances, if you at all you have pointed out some observation in the previous financial year and previous report, then action taken by the management in regard to those non-compliances is also required to be reported, and what action management has taken in regard to comments of the auditor is also required to be reported here. Then eighth point, I will say that compliance related to resignation of the statutory auditor. This is also very, very important point which has been added, which will give a very good look to the, in fact, provision, in fact, SEBI circular dated 18th October 2019, which is talking about that how statutory auditor should do and how compliances in regard to their conduct is required to be reported. So here mention of the compliance related to resignation of the statutory auditor is find the place into the circular in the report, and it is required to be reported by the secretary and this practicing company secretary. Another very important move, ninth point, which is talking about certain additional things or additional affirmation is required to be given by the practicing company secretary. And in that, first point is very, very important for all company secretaries, which is Secretarial Standard 1 and Secretarial Standard 2 and 3 and 4 also, because it says that Secretarial Standard issued by ICSI. So though 1 and 2 is mandatory, 3 and 4 is voluntary. And compliance of those standards is required to be mentioned in this particular report. And there are other points also like adoption and updation of the policy, maintenance and disclosure of website, disclosure of director under section 164, then compliance and related to material subsidiary company, preservation of document, preference evaluation, related party transaction, disclosure of events or information, then PIT regulations related to prevention of insider trading, action taken by SEBI or stock exchanges is required to be specifically mentioned here, and additional non-compliances if any. So these are the basic point and broad framework which has been given in this particular format of the report. And I'm happy to share that ICSI Council has came out with the format of this revised format of this particular report and given the guidance of to the members. And I think 4 or 5 days back, this particular mailer has been circulated to all the members, making the job of the members easy to how to report and what kind of call they need to take while issuing this particular certificate. So friends, this is very, very critical and important certificate. It is unlike any other, say, audit report where you just give your opinion or express your opinion on the broad verification. Here, pinpointing the specific non-compliances, reporting all the compliances is very, very essential. So this report requires complete accountability. I will use the word complete accountability on the part of the practicing company secretary, and also transparency in the reporting. And this accountability on transparency is not only expected from the company secretary in practice. They are equally making management responsible for this, and they are also required to be very, very cautious. So I will say at the end that not only the company secretary, but the management, and it is the responsibility of both. If you read the various provisions of the Companies Act, Section 134, subsection 5, which is director responsibility statement, wherein it is mentioned clearly that director should ensure the sufficient compliances and ensure that compliances are compliance mechanism is efficient, effective, and functioning. So this 134 subsection 5, and then duty and function of the company secretary is also reporting of the compliances. So one side, directors are responsible for compliances, making the compliance mechanism. Other side, company secretary is responsible for making and reporting the compliances. So it is complementing and supplementing each other. So this particular circular is going to empower the company secretaries and make them accountable as side by side. It is also going to make management accountable that you are required to do in this manner, and you are required to give comment on the non-compliances, whatever is there. So this is what from my side, Mohanji, if we can go directly on the question answer, because I feel that webinars should be more and more interactive rather than lecture driven. So opening remarks has been given by Yogita ji, and also I have shared my view. Now you can go directly onto the question answer or take questions from the audience. Thank you.
Okay. Thank you, Ranjit Bhai, for that. What are the important takeaways in the report, and also about the new format of the secretarial complaints report, so which I think few of our practicing company secretaries would have already issued, and few will be issuing in before 30th of May. So thank you very much for your detailed thoughts, and let us get into the questions. So can you share some best practices for effectively preparing annual complaints report, and what are some common challenges organizations face in this process and how to overcome them?
As far as best practices are concerned, I guess any of the audit, because this is preceded by the audit, you need to conduct the audit in detail. And after doing the audit and verification of the compliances, or reviewing of the compliances, or examination of the books and records, you need to issue this report and you need to do the compliances. So what I feel that we need to go deep into the auditing principles and techniques. Why I'm emphasizing on the auditing principles and techniques, and in fact ICSI has also issued auditing standard CSAS 1 to CSAS 4, and which is clearly talking about how you need to get the engagement, how you need to express the opinion and all other things. Something subject to certain adaptation and modification, all the things will be applicable here. Only on the reporting part, some modification or adaptation will be required. As far as engagement is concerned, CSAS 1, or maybe say verification and examination of the documents are concerned, auditing standard is going to provide a big help to the company secretary. So my first advice to all the company secretaries in practice to go through the auditing standards and be conversant with the auditing principles. What kind of auditing principles you are required to follow while conducting the audit, and then auditing techniques are also required, because there may be voluminous document. There are many documents and numbers are very large. Then you cannot go and examine thoroughly each and everything. So it might be possible that somewhere you go for the thorough examination, some places you may go for the sample verification. But sample verification is a risk for you. And if you go on the sample verification, you have to be very confident that what kind of sample you are choosing and whether those samples are effective to go on to the totality or ensure that 100% verification you are able to carry out, even though going for the sample techniques or using the sample techniques. Why you must be wondering that it is a certificate, but still report in the form of certificate is still, I am saying that you need to learn the auditing techniques and principle. Friends, if you see the opening paragraph of the report, which says I have conducted the review of the compliances of applicable statutory provision and adherence to the good corporate practices, having and secretarial review was conducted in the manner that provided me reasonable basis for evaluating of corporate conduct and statutory compliances to provide my observation thereon. So this language clearly suggests that it is first you need to do audit and thereafter you need to prepare this particular compliance report. Though it is a compliance report, but this report is required to be issued after detailed conduct of the audit, nothing less than the audit. So first point, Mohanji, from my side is that we need to be conversant about the auditing techniques and principles. We need to know the CSAS 1, CSAS 2, 3, and 4, so that we should be knowing the nitty-gritties, we should be knowing our limitation and what should be done and what should not be done. Apart from that, second point is after verification of the record or examination of the documents, interaction with the management is also very important and essential. How you interact, how you are able to convince, and how you will be able to get the remarks of the management on each and every non-compliances, if any. If 100% compliance is there, your job becomes easy. But if non-compliance is there, it requires a lot of articulation, it requires a lot of discussion, it requires a lot of decision making, how to report, how much to report, and also requires very good drafting, because remarks you cannot loosely draft. You have to be specific. At the same time, you have to make the balance that you are not exposing the company for the non-compliances which it has not done, because it is going to the stakeholder, all the stakeholders. And I'm saying company secretary should be very careful, because it is going to, as Yogita ji has said in the beginning, it is going to the all stakeholders. And since it is going to stakeholder, they are not, they may be very educated stakeholders, institutions and all, and there may be, say, less educated stakeholders also. They may take interpretation differently. So we need to be very clear in reporting that what we are going to give in the remarks, so that no confusion or no ambiguity should be there in our remarks and no stakeholders should get confused. So absolute clarity has to be given in the remarks, and absolute clarity has to be there and obtained from the management also. So this is what the best practices or best thing practicing company secretary can follow. Now coming on to the challenges part, there are two major challenges I foresee in this report. One is no scope for subjectivity or exceptional reporting. If you want that there is a non-compliance, it is there is prima facie non-compliance, but there is a reason for those non-compliances. Company was not in a position to comply, or it may be possible that company is not able to say come to it, and there was exceptional situation. So whether we should be mentioning those exceptional situation in the report, or we should be just, so of course we can in the remarks column we can mention that, but point here is that it should not look like that you are diluting the non-compliances. You need to be very careful. So this is one challenge company secretaries are going to face, that scope for subjectivity is very less, exceptional reporting is very less, and we have to be very specific and pointed remarks has to be given. Now, second point is management cooperation. How much management is cooperating on non-compliances? Whether they are going to give the effective responses on the non-compliances, where they going to take it wholeheartedly or not. So this is another challenge. And third one is in regard to the previous year reporting, that action taken by the management, whether auditors should be satisfied by the action taken, or whether he should be not satisfied with the action taken, and if it is action taken is non-satisfactory to the practicing company secretary, what he should do in this year report, that is also a challenge. Whether he will just say in the remarks that this is the action taken and I feel that this is not the sufficient action taken, or he will just continue the this year this year compliances also. He should mention that there is a non-compliance of that particular item what was there in the previous year. So this is the third point which I am able to make out, that these things will be the challenges for the practicing company secretary while issuing this report. Yes, Mohanji.
Yeah, thank you, Ranjit Bhai, for that detailed answer for the question. A member has asked a question: how do we determine the sample size for this kind of audit? Also, with respect to auditors and other classes, do we need to give tables even if the provisions are not applicable to the entity during the audit period? So he's asking two questions.
What was the second part of the question?
He's asking if certain things are not applicable, still do we have to provide tables?
I will answer the second question first. That it is format has been given and revised by the ICSI, and it is clearly mentioned in the format itself. I will take example. One format is there which is saying that the listed entity has complied with the provisions of above regulation and circulars and guidelines issued thereunder, except in respect of matter specified below. If you feel that there is no matter to be specified below, I'm talking about point number, I think first, second, third, fourth para, first point number A. So it is saying that except in respect of the matter specified below. Assumingly, there is no matter is required to be specified below. There is no non-compliances. Then what is to be done? So we can simply say, we'll give this particular table and say in the below the table or maybe middle of the table that this is not applicable. Not applicable, or you can say there is no such matter which is required to be specifically reported here. So that will make the report more meaningful rather than completely striking of this particular part. So this is second answer to the second question. What was the first question, one?
Sample size. How do we determine size? Yeah.
It is see, one of the auditing principle is judgment of the auditor. And if I'll say judgment, it completely depending upon you who are going, and it is completely upon your satisfaction, whether you are confident and satisfied that whatever sample you have chosen. Let's say, for example, you have 1 lakh transaction to be verified. So it is practically not possible that 1 lakh related party transactions you will be able to verify. Definitely, you will pick the party-wise list, or you may pick, say, company-wise list. And after picking that particular list, you will verify for each of the party 1 or 2 transactions, or maybe nature of transaction. So you can choose that sale transaction, I am going to verify 20 transaction. Purchase transaction, I am going to verify 20. Then sale, purchase. Then you can say supply of material, goods and services. So you just dissect the provision, and after dissection, you just pick the nature and of course size of the information. And if you are able to justify that I have whatever size I have picked, and on the basis of that particular size, I am able to conclude that in totality, I am able to cover whole of the transaction, then it's fine. So sample size is no, say, stereotype or complete method wherein you can decide that this is the sample size. I'll take 10 or 15 or 20 or 1000. It completely depending upon the transaction, nature of transaction, or number of the parties. So that one example I have given. So this way you have to choose the sample. For better understanding, you need to go through the say auditing principles and techniques, which I have said in the beginning, that how to use a particular technique. Like one of the technique is compliance test. And this compliance test is basically not verification of the compliances. It is test of the compliance tool itself or compliance mechanism itself. That what compliance mechanism company is following, what compliance say tool company is using, whether that particular compliance tool itself is updated or not, whether it is giving proper results or proper reporting or not. That verification is called compliance test. So there are many techniques, examination of the documents. So examination, verification. One thing is also that management representation is also one of the technique where you are not able to verify anything. So what to do? Let's have some kind of interview from the management and then take the confirmation. So that is called confirmation technique. So these techniques you need to understand and go through in detail.
Okay. In your experience, what are some of the common areas of non-compliance that organizations tend to encounter? How can this be identified for proactive compliance?
Okay. This is the depends upon the organization to organization. I will say nature of the industry also. I cannot say that every kind of industry do similar kind of non-compliances or they skip the similar kind of non-compliances. It is completely dependent upon the industry, nature of business, nature of compliances or non-compliances. To list a few, disclosure on a PIT, prevention of insider trading. This is one thing which is coming in most of the companies. Wherever you are going, some lapse, it may be delay in reporting. It may be, say, trading during the closing of window. So whatever it may be, but prevention of insider trading is one such, say, provision or regulation where most of the companies are say able to not able to comply completely, and most of the report you will find that this particular aspect is coming. Another one is reporting and disclosure on say substantial acquisition and takeovers. Here also difficulties are there, and people are not complying. And reportings are non-compliances being reported. Third one I can identify is LODR, Regulation 30, where material events are required to be disclosed. And this is subjective, and whether you consider it material or non-material, that is required to be decided first, and thereafter it is required to be reported. But what is happening that companies, some of the companies are not able to disclose it. And if at all they are disclosing, proper disclosure is not there. And second one is timely disclosure is not there. So what regulation requires? Both the things, timely and proper. And if it is not proper, then also law is not complied in letter and spirit. So whatever material events are there, that is required to be examined carefully by the management and required to be reported in a proper and timely manner.
Okay. This is a general question, not on the format or this one. A member has asked, under Regulation 30 subclass 6, the words mentioned is not later than 24 hours. I mean, it has to be reported not later than 24 hours. Whereas in Regulation 46 subclass 2, the words used is before next trading day or within 24 hours from the conclusion of such calls, whichever is earlier. Can I take under Regulation 30 also the same view? That is, it can be intimated on the next trading day instead of 24 hours. Kindly clarify.
I think the requirement of both the regulations are say different. And if it is saying that material transaction is required to be reported not later than say specified period, so that is required to be specifically followed. So I will not say that Regulation 30 subsection 6, which has been quoted, should be loosely read and correlated with some other thing. This is completely different, and it is talking about the material disclosure of material events. And if you want to say something to be added by Yogita ji from SEBI, so they may be able to clarify the intent.
Ranjit bhai, Yogita madam, she's attending a meeting and she has logged out actually.
Okay.
The annual secretarial complaints report often involves collaboration between multiple departments and stakeholders within an organization. How can organization foster a culture of compliance and ensure effective coordination for the preparation of this report?
Okay. This is again relating to the compliance mechanism and compliance related say efficacy of the compliance within the organization. Whether the compliance mechanism, and I will refer again section 134 subsection 5, where it is responsibility of the management to have the efficient and effective compliance mechanism for the company. I'll take some of the examples and in regard to compliance and coordination, and I'll take the role of the company secretary here also. See, there may be 20-25 departments, and each and every department is responsible for some or other compliances. And it has become very, very difficult job for the practicing company secretary or even for the company secretary in employment to coordinate with those departments. It's very difficult. And if I talk about that, how effective and efficient coordination should happen, for that, each department should consider, and it is a matter of mindset and also the processes and systems within the organization, that each and every department should consider company secretary as a nodal person for the compliance and its reporting. Whosoever is doing the compliance, regardless of the fact, repository of those compliances or nodal person for those compliance, say reporting. So one is repository of the compliance and then reporting of the compliance. Both the cases, it is very, very important and essential that companies. Are you able to hear me?
Yeah. Yes.
Yeah. So, as far as compliance structure of the company is concerned, he should be the repository, nodal person, and he should be the person who is single-handedly reporting all the compliances in the company. Otherwise, if it is responsibility of the so many people, it will become responsibility of no one. So everyone's responsibility is no one's responsibility. Sometimes it happens. So company secretary should be made nodal person for reporting the compliances, and mechanism should be like this. Number one is that making aware, some kind of workshop, some kind of awareness campaign should be there in the company in each and every department who are responsible for compliances, that this is your compliance area. This is what the requirement of the law. You need to do this compliance. So that is number one. Number two is that they should be have some ready-made, say, checklist, require format and required information to do the compliances. They should be maintaining their records. They should be timely filing the information. They should be paying the statutory due on the time. So these kind of some checklist should be there and some trigger should be there. There may be digital compliance tool. There may be physical checklist or Excel sheet on the computer. So that has to be given to the concerned person who is doing the compliances. Third is the role of the company secretary. That in fact, second is also role of the company secretary. He should develop the checklist and give it to the concerned department to comply. Third is the role of the company secretary again, that he should be giving the reminders, auto reminders, maybe Google Calendar invite, or maybe say some kind of trigger should be there for the with the concerned person, that this is the compliance, this is the due date is coming. Some revision is there in the provision of the law. Some updation is there in the law. So that has to be reported to that particular individual who is doing the compliance, or that particular department who is doing the compliances. So that is second part. A third part. Fourth part is that you done this particular reminder. Now compliance part. Compliances have been done. The moment compliances has been done, it should come to the knowledge and knowledge of the company secretary that yes, this particular compliance has been done. And company secretary in turn compile all the information received from the various directorates or department, and after compiling, give it to the management or prepare some kind of report and place it, whatever is material and important, to the company. So why I'm saying all these is required to be done, because if you have 22 departments or 20 departments, this will ease your efforts, that automated system has been placed and everyone is responsible for the compliance is reporting to you or giving the reports to you. And in turn, you are submitting it to the board. And if you are submitting it to the board, you can always say to that board is asking, directors are asking, MD is asking, chairman is asking, and that gives some additional pressure or some kind of additional responsibility on the concerned department or directorate, that yes, my compliance is also going to be reported in the board meeting by the company secretary. So I should be very careful and vigilant in doing the compliances. There should not be any non-compliances. So this will completely set up the system in a process of compliance in the company. And you can see that in MR3 also, system and process of compliance in regard to other law, there is a paragraph. So that paragraph is also required to be verified like this only, that this kind of system is there. It may be this or it may be some other system, but system is there in the system of reporting and doing the compliances is there in the organization. So this is what we can do. There may be any number of ways of doing it. It may be possible that compliance tool you have bought and some everybody has been some role assigned in the software, and that software is giving the trigger, giving the reminders, and then on the basis of software itself, you are doing the compliances, uploading in the software, and thereafter it is ready-made report is coming to the company secretary and his internal reporting.
Okay. Ranjit bhai, one question has come. The company has duly complied with a specific provision, but in a delayed period of say 10 days beyond the prescribed period. Is it necessary to pinpoint such a lapse in the report?
My answer to this question is yes. What is the harm in pinpointing? Report is saying that, see, we are talking about the security law. We are talking about the regulations. And any information, depending upon again, I'll bring here the concept of the materiality. If it information is relating to takeover or maybe insider trading, even a delay of hour will become very important. So we need to think that what is relevant and what is important. And if it is not relevant and important, then even a stakeholder will not give heed to it. It is reported, it is not a big matter. So what is the harm of in the for the company secretary in reporting that particular delay of 10 days? He can give the subjective statement here that yes, compliances has been done, but it has been done with the delay of 10 days. So this kind of statement can be given. I will not advise to skip it. Let stakeholders and regulator decide whether it was important and material or not.
Okay. Now, there are two questions, both are almost similar. One member is asking how to deal with a client who is not cooperating to provide copies of secretarial records for future reference, citing reasons of confidentiality. This is one question. Another one almost similar is company has been levied penalty by exchanges and company is not disclosing what is the reason and how much amount has been paid. So these details is not disclosed by the client. So these are two similar questions I want to put both together to you.
See, as far as confidentiality is concerned, I don't believe that anything is confidential to the secretarial auditor. Of course, he is in turn required to maintain the confidentiality. He is bound by one of the auditing principles says that auditor should maintain the absolute confidentiality of the information, whatever he has gathered from the, during the course of the audit. So confidentiality, he is part and parcel of the system. The moment he has been appointed as a, practicing company secretary to issue this report and privy to all the information given by the company, he is supposed to maintain the confidentiality. So management cannot say that since this is important and confidential, we cannot disclose it. If it is confidential for the management also, like in insider trading, like some price sensitive information. If price sensitive information is there, and if that particular information is not required to be disclosed, it will not be disclosed to anyone, including auditor. So that is fine. But other information which is record of the company, Section 143 is clearly giving the power to all the auditors to have the access of all the information and document, whatever it is required and available to be made available for the purpose of audit and issuing the certificates.
Now the question here is, they are not given. Now, what can he do? Despite all that.
He needs to give the comment. He needs to give the comment in the report that or reason for say not able to comment on the certain parameter. I'll give you an example. Specific regulation has been maintained, right? And then prohibition of insider trading related information has not been disclosed. Point number G. So he can say that I am not able to comment on this particular part. He will have to mention this in the report itself that I am not able to comment, or maybe I'll refer the same para, the listed entity complied with the provisions of the above regulation and circular, except in respect of the matter specified below. So he will give the general statement below the table that I am not able to comment on this particular paragraph because sufficient information and document has not been made available to us. So that particular disclosure has to be given, and this is another one of the principle of reporting, that you have to disclose that on what basis you have given the report and why you are not able to report certain non-compliances or compliances.
Okay, thank you. As a company secretary in whole-time employment, how the responsibility of reporting to board can be discharged to ensure compliance under various acts?
It's a very, very big question, and in fact, I'll supplement my answer what I have given for the say coordination among the departments. I said that in one of the point that we need to make a checklist, and we need to involve and engage all other departments who are responsible for compliance. Some kind of, in fact, I will say that if there is a plant or factory or location, warehouse, or all other different kind of say locations are there, different kind of specifically applicable law is required to be complied, or some general law is required to be complied. So what I will suggest is that to have one say a regular meeting among the departments and to discuss the compliance requirement and prepare a major checklist or detailed or consolidated checklist of all the compliances. Though function of the company secretary under section 205 is making that you need to report all the compliances, but you are not the only one who is doing the compliances and actually reporting the compliances. There are many people who are behind it. It may be finance department, it may be purchase department, it may be say stores also, it may be even factory manager or plant manager. Everybody is doing some or other compliances. So what I suggest that say regular meetings has to be done, maybe quarterly basis or maybe 6 monthly or annual basis, so that we should be able to assess that what are the compliance requirement of the company, what are the specifically applicable to law to my company, and what are the other general law to applicable, and how we will improve the system and process of compliance, how to make it more robust, and how to make do the reporting.
Okay. Another question is, what are the recent amendments in this compliance report, and what are the additional areas practicing CS need to look into?
See, revised certificate, I think I will refer the latest circular 10th April 2023 issued by the say National Stock Exchange to the all listed company. And in fact, a similar circular has been issued by all other exchange also. Additional affirmation by the practicing company secretary in annual secretarial compliance report. So they are going one by one and saying that number one is secretarial standard. I have already given it in my opening remarks, but just for the sake of clarity, let me go through it again because this is important. Secretarial standards, compliance of the listed entity are in accordance with the applicable secretarial standard issued by ICSI. So this is one. Second one is adoption and timely update of the policies. So it is saying that all applicable policy under SEBI regulations are adopted with the approval of the board. So important point is that they are asking that all the policy has been made and it is adopted by with the approval of the board. So sometimes it happens that approval has not been taken. Policy is there, but approval has not been taken. So that should not be there. All policies are conformity with the SEBI regulations. So this is required to comply. So that means practicing company secretary is required to read each and every policy, and after reading, he need to correlate it with the SEBI regulation, whether it is in line with the SEBI regulation or not. If it is not in conformity, then he will have to report it. So that is another point which is there and has been reviewed and timely updated. So another point here is reviewed and timely updated. Next one is maintenance and disclosure on the website. In this, they have given the 3 points that listed entity is maintaining a functional website. So whether website is functional or not, that is also required to be confirmed. Timely dissemination of the document information under a separate section of the website. So disclosure related web page should be different, and this particular requirement is saying that timely dissemination of the documents and information under separate section of the website. So this language is very clear. Then third one is web link provided in the annual corporate governance report under regulation 27(2), and accurate and specific, which redirects relevant documents section of the website. So annual corporate governance report becomes very important document which is uploaded on the website, and it should have the link of all the documents which has been referred into it, and that particular link should take it to the relevant document and section of the website. Fourth is disqualification of the directors. So this is one statement is required to be given that none of the directors are disqualified. Then fifth one is to examine detail in relation to subsidiaries of listed entities. So identification of the material subsidiary, how it has been identified and who are the material subsidiaries. Then requirement with respect to disclosure of material as well as other subsidiaries. So what disclosure they are required to give and what disclosure we are required to give in regard to the material subsidiary, that is also required to be given here. Then preservation of the documents. So what is the policy for disposal of the records as per the policy of preservation of the document and archival policy prescribed under the SEBI LODR? That is required to be confirmed. Performance evaluation, listed entity conducted the performance evaluation of the board. So here also annual secretarial compliance report is giving the mention and you need to comment. Then eighth is very important, related party transaction. It is saying listed company has obtained the prior approval of the audit committee for all related party transaction, number one. Number two, in no case prior approval is obtained, the listed company shall provide the detailed reasons along with the confirmation whether the transaction were subsequently approved, ratified or rejected by the audit committee. So both the things are required to be done, whether it has, say, prior approval has been taken. If it has not taken the prior approval, then the ratification or rejection or approval, whatever the case may be. Ninth one is disclosure of event on information as required under regulation 30, schedule 3 of the SEBI LODR 2015, and within the time limit prescribed. So time limit is also required to be adhered, and prohibition of insider trading is the 10th one. Then 11th is action taken by the SEBI and stock exchanges, if any. This point is very, very critical. And in fact, here I think indulgence of the, say, institute and SEBI is required, because it says no action taken against the listed entity, its promoter and director, subsidiary either by SEBI or stock exchange, including under the standard operating procedure issued by the SEBI through various circulars under the SEBI regulation circular issued. Question here is that practicing company secretary came to the knowledge of the practicing company secretary that some show cause notice has been issued by the stock exchange or SEBI. If that show cause notice has been issued, whether it will be treated as action against the company or imposition of the penalty or asking the company that you are guilty, that will be action against the company. I think as the report format is concerned, I will say that even show cause notice is an action against the company. Initially, I will say, but SEBI may clarify this particular point, that whether issuance of the show cause, merely getting the show cause notice, will amount to action by the SEBI or not, because show cause notices can be issued for any compliance, non-compliances. It may be, say, gaps between, say, understanding that whether I am able to comply, or SEBI or regulator may not be able to understand whether, and I have clarified and matter show cause notice has been dropped. So how I will treat it as an action against the company, merely issuance of the show cause notice, that particular point is required to be discussed more. Of course, if penalty has been imposed by the stock exchanges, or say some action has already been taken, or maybe some compounding application is pending, so that means action has already been taken, so that has to be reported. Last point, additional non-compliances, if any. So here it gives the lot of scope or ample scope to the auditor to include each and everything, whatever is required to be included into it. So that is also a part. And then revised format is also talking about that say compliance, not compliance, and then previous year compliances, which I have already mentioned. So these three things has already is required to be reported. So these are the additional requirement came in the revised format.
Thank you, Ranjit Bhai. On applicability, there are a couple of questions. Whether this certificate is also applicable for high value debt listed entity, and is there any exemption for the financial year 22-23?
In fact, I will say that it is applicable to the listed entities. And since it is listed, debt and securities is also listed in the stock exchange. So, in my opinion, yes, it is applicable to the all kind of listed entities.
Okay. Another question on applicability: whether annual secretarial compliance report is applicable where listed entity has paid up capital not exceeding 10 crore and net worth not exceeding 25 crore as on the last day of previous financial year.
No, not able to get. I think question has the answer also.
Okay. No, they are saying their paid up capital is less than 10 crore, net worth is less than 25 crores. That is why they are asking.
But it is applicable to the listed entities. This criteria is not, say, relevant here.
Okay. And how do you foresee the future of this annual secretarial compliance report? Future, any changes or where this the focus, additional focus can come in?
Future all depends on the say quality of the reporting. I will not say that whether this particular certificate is becoming relevant to the regulator and all other stakeholders or not, whether we are going to get some input from it or not. If we will be doing the honest reporting, if we will be doing very efficient reporting, and will be able to bring something to the table of the management as well as to regulator. I'm not saying that this is only for the monitoring of the compliance. It is for ensuring the compliance also. And management will also be comfortable. So I think practicing company secretary who is issuing this particular certificate should not only be acting as an auditor. He should be some kind of guide also to the management that last year this was the problem. This next year this problem should not come. So level of compliance should be enhanced. System and process of the compliance should be made more and more robust in the times to come, so that ultimately zero non-compliances should be company secretary in practice should be able to report. So whether we are able to guide the management, whether you are management is able to take some input out of it or not, and finally regulator and all other stakeholders are getting some value out of it or not. So whatever is the objective of this particular annual secretarial compliance report is that accountability of the management and auditors and transparency is required to be ensured in disclosure to the stakeholders. If we'll be able to achieve the twin objective, then this particular compliance certificate is going to have the value in the times to come. And not only this, after initiative the SEBI, even other regulators like IRDA and all other regulators are considering the possibility of issuing separate annual secretarial compliance report or annual compliance report for the say sector specific company. And if it will be the reality, then of course SEBI being the say front runner has given the impetus on the reporting, specific reporting of the compliances of the various rule and regulation, and all others are following.
Thank you, Ranjit Bhai. Ranjit Bhai, we're extremely happy to say that more than 15,800 members have participated, more than 15,800 members, though the topic is relevant for listed companies alone, and we are extremely happy to know this. And Any concluding remarks you want to give? Kindly share, Ranjit Bhai.
No, Mohanji, thank you so much for giving me an opportunity. And in fact, I will request the council and of course all the members that council should also come out with the clarification from time to time, whatever difficulties are coming from the member. And in fact, guidance note on the annual secretarial compliance report, which has been prepared in the year 2019, and thereafter subsequently it has been revised. So now new format is there, and I am 100% sure that under the able leadership of Mr. Manish Gupta, President ICSI, council must be considering it to revise it and release it as early as possible. So that is the take that that document is very, very important. And in fact, SEBI has ensured that the moment this circular has came in the February 8, 2019, within a month, I remember that when I was president at that point of time, it was a lot of pressure from the SEBI that you need to release the guidance note on the annual secretarial compliance within a month's time. And remember Pradeep ji at that point of time coming and sitting on the giving all the support, possible support for release of that particular compliance report. So I hope that very soon that compliance report will be released and it will ease the working of the practicing company secretary in issuing this report. That's it. Thank you very much from my side to entire institute and team of Corporate Land Governance Committee for organizing this excellent webinar. I'm happy to part of this webinar, and thanks all the members for coming and joining and raising such a relevant question. Your questions has made it more and more participative and interactive. Thank you so much. Thank you.
Thank you, Ranjit Bhai. Members, it's time to say thanks to both the resource persons today. Ms. Yogita, she gave the opening remarks, and Mr. Ranjit Bhai, he shared whatever the important updates in the Secretarial Compliance report, and also in a very, very detailed manner answered all the questions very patiently and very aptly. Friends, Mr. Ranjit Bhai was the president in 2019. That was the first, during the last term, he was the first president. And whenever a new council comes, the first president, he is like the leader of the group. And he will be the mentor for the next 3 presidents as well. That is a customary practice. Like an elder brother in a family, others follow him. So, we're extremely happy and exceptional contribution done by Mr. Ranjit when he was the president. Not only that, not only during 2019, 2020, 21, 22 also, anywhere ICSI requires any help, he is the go-to man person, without any hassle, without any looking for any recognition, without nowhere his name will come, but still he will come to the institute, sit for hours together, prepare some document, prepare a representation, prepare certain notes, and more particularly his contribution after he got down from presidentship in designing the new syllabus is phenomenal. It's a marathon work, not a small work, where he had done tremendous amount of work. And thanks to you, Ranjit Bhai, for all the contribution you have been doing for the betterment of our profession. And special thanks for your session today, and also all the interaction through, though not directly, but indirectly, whatever questions members have given, you aptly answered. Thank you very much. I also thank Ms. Yogita Madam, and also the Secretariat of Corporate Law Committee, and finally, not the least, the President ICSI for giving me the opportunity to be the moderator for this session. We will surely have many more such sessions, and I request members to actively participate. Thank you very much.